Now, as China revises its Africa strategy, Beijing's lending to the continent nearly halved to $2.1 billion in 2024, marking the first annual decline since the COVID-19 pandemic. I did point this out a little bit earlier on, that in the year 2016, Chinese investment on the African continent was sitting at $28.8 billion, which is quite a hefty price tag, and it was in fact the peak of their investment in the African continent. So this does, however, underscore a shift away from large-scale infrastructure projects. Initially, China was investing in railways and roads, but towards a move now they've taken towards smaller and more commercially viable investments. Analysts are saying that the change reflects lessons from losses on earlier loans, and this is particularly after the pandemic-related economic pressures that pushed countries like Zambia, Ghana, and Ethiopia into default. For more on this, we're joined on the line by Bernard Ouandji, former Senior Economist for the United Nations, and he is based in Cameroon. A very good afternoon to you. Good to have you with us. Welcome to Africa in Business.
Okay, thank you for talking to me. I am very well.
So when we look, Bernard, at the huge decline in African investment by China, the main reason is said to be the debt defaults by the aforementioned companies. Is that indeed the main reason why China is deciding to cut lending to Africa for large infrastructure projects? Or is there something more to this?
You know, Africans and observers have been very enthusiastic about China investing in Africa. And the China intervention was branded as win-win. But I was more cautious. I have always been more cautious because you cannot pour in money into a nation without building capacity. China has not contributed to building human capacity in Africa. You see, African intellectuals, engineers are not educated by China. So China came in to invest large sum of money in railroads, infrastructure, billions and billions, without making sure that the country has the capacity to absorb that investment, that huge investment. So there is a problem of capacity since the beginning, and I will be talking about that for some time.
So,
You see?
so that's a point that you're making there. But I wonder if indeed the countries that China was borrowing to, was lending to, such as Zambia, Ghana, and Ethiopia, were actually paying back the loans that China had given to them, would this not make good business sense for China? Would they not have kept investing in those large-scale projects for those sums of monies?
Yes, because China used to say that my intervention is politically free, which means that China does not interfere in political governance, democratic governance, and economic governance as well. So the recipient countries that you have mentioned and many others in Africa are autocratic systems. You see, they have autocratic rules, corruption, poor capacity to run a project, and as a result, you have cost overrun, and then you have many delays that have to be blamed on the government side, on the African government side. You see, now you have, if you take a country like Cameroon, there are 2 or 3 large projects, including a railway between the economic capital and the political capital, between Douala and Yaoundé. That railway has consumed more than 100% of the initial envelope, and yet it has been constructed at the level of 30% only. So there is a problem of corruption, poor governance by the African governments that limit the absorption of the money that China is pouring in. For that reason, China has to reduce the envelope of its intervention.
So what impact is this likely to have, Bernard, on the African countries and the African economies that rely very heavily on investment as far as infrastructure is concerned. Will this decline in Chinese mega project fundings have a negative impact on the economies, or does this just open up a way for other instruments and like the IMF or the World Bank or private investors to once again come into that infrastructure funding for the continent?
Yes, the China's strategy was meant to be very simple. Oils and minerals against infrastructure. They build the same infrastructure, they come in the same infrastructure in every country, and then they take the mineral to repay. When I'm talking about poor economic governance, many of these Africans, when they sign the contract for the loan to repay infrastructure by delivering minerals, they are not aware that there is that all world market for minerals are subject to high volatility. And then you see countries now that are repaying 2 times the quantity of the oil that we're supposed to deliver in order to pay the installment. So that's what I call a total, poor economic governance on the African government side. Now, China may now reduce its intervention in volume and possibly now seek to accompany countries by coming in with projects that can generate income, because infrastructure alone do not generate income. So maybe China is now trying to come back with a project that can generate income, really generate income, really create employment, so that it could be a win-win in the future. But in the past, it has not been a win-win.
Bernard, could there not be a mixed strategy here that China could focus on? Because yes, you want the lower hanging fruits, you want investments that are going to bring back returns, but you also want to ensure and safeguard future trade. And infrastructure is so key to that. So while China pursues the low hanging fruits and the return on their investments, could they not also, alongside that, continue with the big ticket items of infrastructure development? Because that is the real game changer for Africa-China relations in the future.
You're perfectly right. China could envisage a mixed strategy, and focus on the project that generate income, and also income in the export sector, so that we do projects that generate foreign exchange to repay the loan instead of just trading the minerals against the infrastructure. So this strategy is something that will be good, but it takes time. China, do that. We are willing to take it, and then China will have to look into the economic governance of African countries, like the traditional lenders have been trying to do during the past decades.
All right, Bernard Ouandji, thank you so much for your insight as we look at the decline in China-Africa investment, as well as the redirection and realignment of China's investment strategy on the continent. Thank you for your time, sir.
Okay, thank you again.
Merci
Happy New Year.
Happy New Year to you. That's Bernard Ouandji, former senior economist for the United Nations, and he is based in Cameroon.